Your credit score, your financial key. A good credit score is essential for financial success. It's a 3-digit number that tells lenders how risky it is to lend you money. A higher score means you're more likely to repay your debts on time, making you a desirable borrower. Think of your credit score like a report card for your finances. It reflects your financial responsibility. Lenders use it to determine your interest rates on loans. Lower interest rates save you money over the life of a loan. A good credit score opens doors to better financial opportunities. You can qualify for lower interest rates on mortgages, car loans, and credit cards. This saves you money and helps you build wealth faster. Take control of your financial future by building and maintaining a good credit score. It is an investment in your financial well-being. Understanding your credit report. Your credit report is a detailed record of your credit history. It includes information about your credit accounts, payment history, and outstanding debts. You have the right to access your credit report for free from each of the 3 major credit bureaus: Equifax, Experian, and TransUnion. Review your credit report regularly to ensure accuracy. Look for any errors or inaccuracies that could be negatively affecting your score. Common errors include late payments that weren't your fault, or accounts listed that don't belong to you. Your credit score is calculated based on the information in your credit report. Several factors influence your score. These include payment history, amounts owed, length of credit history, credit mix, and new credit. Understanding your credit report and score is the first step to improving your creditworthiness. Knowledge is power when it comes to your finances. Practical steps to boost your score. Improving your credit score takes time and effort, but it is achievable. Start by paying all your bills on time, every time. Set up payment reminders or automatic payments to avoid missing due dates. Reduce your credit card balances. Aim to keep your credit utilization rate below 30%. This means using less than 30% of your available credit limit. Pay down existing debt as quickly as possible. Avoid opening too many new credit accounts in a short period. Each new credit application can result in a hard inquiry on your report, which can temporarily lower your score. If you have a limited credit history, consider becoming an authorized user on a responsible family member's credit card, or opening a secured credit card to build positive credit. Small steps can make a big difference. If you find errors on your credit report, don't panic. You can dispute them with the credit bureau that issued the report. Contact the credit bureau in writing and provide supporting documentation to validate your claim. Be specific about the errors you are disputing. Include your full name, address, date of birth, and social security number. Explain why you believe the information is inaccurate and provide any relevant documentation. The credit bureau is required to investigate your dispute within 30 days. They will notify you of the outcome in writing. If the error is corrected, your credit score will likely improve. Regularly monitor your credit report, even after correcting errors. Stay vigilant to protect your creditworthiness. Improving your credit score is an investment in your financial future. It empowers you to achieve your financial goals and secure a brighter tomorrow. Start taking action today to build a solid credit history. Remember to pay your bills on time, manage your debt wisely, and be sure to monitor your credit report regularly. Small changes can lead to significant improvements over time. Many resources are available to help you on your journey to creditworthiness. Seek guidance from reputable financial advisors or credit counseling agencies if needed. Don't delay. Take charge of your credit and unlock a world of financial opportunities your future self will thank you for.